Beijing's reported curbs on the use of iPhones by government staff have raised concerns among U.S. lawmakers. They're also fanning fears that American tech companies heavily exposed to China could be caught in the storm. Are these concerns hurting Apple and its suppliers? They are extending losses in pre-market trade today after slipping on Wall Street overnight. Apple fell nearly 3%, capping its worst two-day decline since November. The sell-off erased $200 billion from its market value, while its supplier Qualcomm also tumbled. Bloomberg earlier reported Beijing could expand restrictions on iPhone use to include state-owned companies and government-backed organizations. A Bank of America estimating the ban could affect 5 to 10 million iPhone sales a year in a market that accounts for up to 50 million units sold. In addition to Beijing's curbs, growing competition from Huawei is casting a shadow over launches next week of much anticipated models from Apple. Our analysts had predicted the launch of iPhone 15, that putting Apple within reach of becoming the world's biggest smartphone maker by volume for the first time. The Chinese market plays a key role in Apple being able to reach that milestone. But a series of surprise new launches by Huawei could hurt sales in one of Apple's biggest markets. China has been a bright spot for Apple in an otherwise tough period for iPhones, as business for rival Huawei was severely dented by U.S. restrictions on tech exports to the company starting 2019. And for more on the headwinds facing Apple and its U.S. big tech peers, we have Daniel Ives, Managing Director of Wedbush Securities, joining us from New Jersey. Mr. Ives, Bank of America, we quoted just now, saying this ban, reports, assuming the reports are true, could affect sales of 5 to 10 million units every year. Your report, though, your projection is more like 500,000 units out of the 45 million you projected to be sold in the next 12 months. Why the huge gap between what Bank of America is saying and what you are saying?
I think in times like this, it's easy to yell fire in a crowded theater. And I think that's what's happened across the board. I'm not saying that this is not a concern. You're going to continue to have this cold tech war play out between U.S. and China. But we believe it's ultimately 500,000 iPhones that are really in the window here that could be disrupted. We'd be buyers of Apple here. We continue to think they're going to gain share in China despite this, quote unquote, shadow ban.
I take your point about crying fire because, in fact, we have known for years, since at least 2018, the Chinese government curbing procurement of IT equipment from foreign companies. 2020, that expanded to smartphones as well. It's maybe not headline news, but it's certainly in the news. Why are we looking at, $200 billion being wiped off Apple's market capitalization in 2 days, 3% fall in stocks? Why this reaction when we already know?
I think it speaks to the broader nervousness, which always been around names like Apple, Tesla with huge China exposure. It's fighting a ghost, right? The last decade, this call it black swan worries. Anytime reports like this happens, the bears think this is the moment where the China story collapses. Ironically, Apple's gained 300 bips of market share in China the last 18 months. And Huawei, despite coming out with this new phone, it's going to be an uphill battle. We're still talking about, from a nanometer perspective, the iPhone 15 is miles ahead of this phone. And I think the average Chinese consumer, we estimate right now you have about 200 million of them, is going to continue to upgrade, despite maybe some limited disruption with some workers having a Huawei phone at work.
All right, you mentioned the Huawei phone. So it's the Smart 60 Mate, which you have pointed out that cheaper, lower-priced smartphones might pose a real risk for a company like Apple. And it costs about $970 as opposed to iPhone's rather more expensive offering. So you do not see Huawei's new offering as challenging offerings from companies such as Apple?
Look, I think on parts of the market, you could disrupt maybe 5-6% of the overall opportunity. But the premium, the gold standard smartphone around the world continues to be iPhone. And if you look at the Chinese consumer, that's what they continue to buy. And I don't really see that changing. Now, look, with some of the government curves around, some of the sensitive areas of the government, maybe some of the state-owned, you can maybe now see two phones, where you have a Huawei coming to work, use your actual iPhone at home. That's really been no different in the last few years. But ultimately, for Apple, continues to be the gold standard. And I don't see that changing, despite now many of the bears coming out of hibernation mode on this report.
All right, Mr. Ives, a final question. You have been glowing about this gold standard, the launch next week of 4 new models, and enhanced battery life, faster and much better camera functions. Very quickly, give us an outline of what we can expect next week.
From a camera technology, it's going to be basically 5-6x, in terms of the capabilities from what we see from iPhone 14. You're going to have the new iPhone chip in terms of Apple's chip. And I think there's some design changes as well. And I think when you put all that together, right now you have 25% of the install base that have an upgrade in 4+ years. I continue to believe this is just going to be another flex the muscles moment for Apple.
Thanks so much for that. Daniel Ives, Managing Director of Wedbush Securities. Thanks for joining us this evening.